Welcome back to Talk Tickers, everyone. You ready to dive deep into some earnings?
Always.
Awesome. Let's unpack Amazon's Q3 2024 earnings call, fresh off the press from yesterday, October 31st.
All right, sounds spooky.
You know it. Get ready for e-commerce insights, cloud computing updates, a glimpse into AI, and even a touch of space exploration. All in under an hour.
Challenge accepted. What's fascinating about Amazon is how they manage to weave together such different businesses, e-commerce, cloud, and even space, into this powerful ecosystem under Andy Jassy's leadership.
Yeah, they really do have their hands in a lot of different pots. We'll be dissecting their performance this quarter to see if their focus on profitability is paying off while they're still pushing those innovative boundaries.
Sounds like a plan.
Okay, so remember that stock roller coaster we saw earlier this year? Amazon hit that 52-week high back in July.
Yeah, I remember.
Then took a dip after their Q2 earnings call. Analysts were predicting growth, but Amazon themselves issued guidance for Q3 revenue that was lower than expected. So did those spooky predictions come true? Or did Amazon pull off another surprise win?
Well, let's look at the numbers. Revenue came in at a whopping $158.3 billion.
Whoa.
An 11% increase year over year. Not only did this exceed their own guidance, it also blew past analyst predictions.
Wow, so they crushed it on revenue. That's a strong start. But what about the bottom line? How did operating income look? Was it all just smoke and mirrors?
Even more impressive.
Really?
Operating income hit a record high of $17.4 billion, a 56% jump year over year. Like they found a secret money tree.
That's what I call a spooky good result. What drove those numbers? Was it all Halloween candy sales?
Not quite. One major factor was their Prime Big Deal Days event back in October. Amazon declared it their biggest ever.
Interesting.
Suggesting strong sales that definitely boosted their Q3 results.
Yeah, that makes sense. Prime Day is always a big one. Plus, we're heading straight into the holiday shopping season, which is always massive for Amazon. So even though their initial guidance was cautious, those elements combined seem to have pushed the numbers higher.
Right.
Okay, but to really understand what's going on beneath the surface, we need to go beyond those big, flashy numbers and look at the key metrics that reveal more about Amazon's overall strategy, right?
Exactly. One of the most important metrics to understand is operating margin. Amazon has historically been all about growth, even if it meant sacrificing some profit. But under Andy Jassy's leadership, they've been putting more emphasis on profitability.
And they actually hit that magical double-digit operating margin for the first time in Q1 this year, reaching 10.7%, but then it slipped back to 9.9% in Q2. Their guidance for Q3 was even lower, between 7.3% and 9.5%.
Oh, yeah.
So the big question going into this earnings call was whether that downward trend would continue or if they could turn things around. Drum roll, please. Did they manage to boost those margins?
Oh, they did. Their operating margin for Q3 landed at a stellar 10.9%. That's significantly above their guidance and even higher than that record-breaking Q1. Like they turned that margin frown upside down.
Wow, that's a huge beat on margin expectations. Sounds like their cost-cutting measures are really paying off. But the question on everyone's mind is, are these margins sustainable? Or is this just a temporary boost?
That's the million-dollar question. We'll need to keep a close eye on it in the coming quarters. Amazon did mention a few specific things driving this strong margin performance.
Oh, yeah.
For one, their North America and international segments both saw improvements in their fulfillment network cost structure, partly due to better inventory placement.
So basically, they're getting more efficient with their logistics, which helps them lower costs.
Exactly.
Okay, makes sense. Anything else contributing to those amazing margins?
They also highlighted strong growth in their everyday essentials categories.
Everyday essentials.
Right, things like household goods, personal care products, groceries, that sort of thing. Now, these items tend to have lower average selling prices, but people buy them more frequently.
So even though they might be selling some things at lower prices, they're making up for it with increased volume and repeat purchases. That's pretty clever.
It is. And one more important detail to keep in mind. Amazon revealed that they increased the estimated useful life of their servers starting this year. That contributed about 200 basis points to the AWS margin increase year over year.
So they're getting more mileage out of their server equipment, which directly boosts profitability for AWS. Smart move, especially with the massive investments they're making in that area.
Exactly. Speaking of investments, let's move on to another area where Amazon is seeing incredible growth, the advertising revenue.
Oh, yes. The engine that keeps on chugging.
Yeah.
I've been hearing so much about how Amazon's ad business is absolutely exploding. What did Q3 look like?
It was another strong quarter for them. They brought in a cool $14.3 billion in ad revenue,
Wow.
an 18.8% increase year over year.
Okay, so maybe the growth is plateauing a bit, but it's still a major revenue driver. Why do you think they're continuing to see such success in this area?
Well, there are a few things at play here. First, we're seeing a general resurgence in digital advertising as the economy stabilizes. Companies are loosening their purse strings and spending more on online ads, and Amazon is reaping the benefits.
Right. Plus, they have this massive platform with a ton of user data, which gives them a real edge when it comes to targeted advertising.
Exactly. And don't forget about their highly engaged audience. Prime members are more likely to click on ads and make purchases, which makes Amazon a very attractive platform for advertisers.
And on top of that, they've been strategically expanding their ad offerings,
Yeah.
especially on Prime Video.
Right,
They're going head-to-head with giants like Meta and Alphabet in the streaming ad space.
precisely. Here's where it gets really interesting, though. With major events like the Paris Olympics and the U.S. elections coming up next year, ad spending is expected to skyrocket.
Oh, good point.
How is Amazon positioning themselves to grab an even bigger piece of that pie? Well, they've already announced plans to expand Prime Video ads to even more countries in 2025. They're clearly looking to capitalize on this growing market and become a major player in the global advertising landscape.
It'll be fascinating to see how their ad revenue growth evolves, especially with that increased competition in the space. But speaking of competition, we can't talk about Amazon without talking about their cloud computing powerhouse, AWS.
Ah, yes, AWS, the cloud computing behemoth. Even with tough competition from Microsoft, Azure, and Google Cloud, they just seem unstoppable.
Seriously, they're currently operating at an annualized revenue run rate of over $110 billion, and their growth is actually accelerating.
You're telling me. In Q3, AWS revenue grew by an impressive 19.1% year over year, even higher than their Q2 growth of 18.8%. They're not just big, they're getting bigger faster.
So what's fueling this phenomenal growth? It can't just be cat videos and online shopping, right?
Definitely not. Two main factors are at play here. First, the ongoing shift to cloud storage is huge. Businesses of all sizes are recognizing the benefits of moving their data and applications to the cloud. It's more cost-effective, scalable, and often more secure.
Right, it's like renting an apartment versus owning a house. You don't have to worry about the maintenance and upkeep, you just pay for what you use.
A perfect analogy. And the second major driver is the explosion of generative AI. These AI models require massive amounts of computing power for training and deployment, and the cloud is the perfect environment for that.
So AWS is perfectly positioned to benefit from both the ongoing digital transformation and the AI revolution. That explains why they have such a massive backlog of orders, right?
You guessed it. At the end of Q2, their AWS backlog was a staggering $156.6 billion.
Wow.
This demonstrates continued strong demand, even as competition in the cloud computing space heats up.
AWS clearly remains a major growth engine for Amazon. But they've also got another big bet in the works, Project Kuiper.
Ugh, Project Kuiper. It's their ambitious venture into satellite internet. Picture this. They're aiming to provide high-speed internet access to underserved areas around the globe using a network of over 3,236 satellites in low Earth orbit.
It sounds like something straight out of a sci-fi movie, but they're actually making it happen, right?
They are, but they're facing a tight deadline from the FCC. They need to deploy at least half of those satellites by mid-2026. And building and launching those satellites is no small feat or expense.
Wow, that's not a lot of time. And I've heard that building those satellites is not cheap.
You're right. Industry analysts estimate the total cost of Project Kuiper could reach somewhere between $6.5 billion and $20 billion. That's significantly higher than Amazon's initial estimate of $10 billion.
So this is a major investment for Amazon, and I'm sure investors are eager to know when those costs might start translating into revenue. Any hints about that in the earnings call?
Not quite yet. In fact, analysts are predicting Project Kuiper could lead to losses of up to $1 billion in Q4 of this year, potentially rising to $5 to $6 billion next year.
Okay, so it sounds like this is a long-term play for Amazon. But the potential payoff could be huge if they pull it off.
Yeah, absolutely. If they can achieve their ambitious goal of 100 million subscribers, analysts estimate Project Kuiper could generate a whopping $36 billion in annual revenue.
Wow, that's a game-changing number. But of course, they're not the only player in the satellite internet game. SpaceX's Starlink is already a major competitor with over 6,000 satellites already in orbit.
That's true. So it'll be interesting to see how Amazon differentiates Project Kuiper and gains market share, but they do have a few key advantages up their sleeve.
Like what? What makes them think they can take on a giant like SpaceX?
Well, for one, they can seamlessly integrate Project Kuiper with AWS,
Ah, I see.
which could be a huge selling point for businesses and organizations. They also plan to target specific niche markets, like providing internet access to airplanes, ships, and other mobile platforms. And they're not going it alone. They're forming strategic partnerships with major telecom companies like Verizon, Vodafone, and NTT. This will help them expand their reach much more quickly.
So they're leveraging their existing strengths, targeting specific markets and building key partnerships. That's a smart strategy. But Project Kuiper isn't just about connecting people to the internet to watch funny cat videos. There's also talk about using it for national security and defense purposes, right?
Exactly. There's speculation that Project Kuiper could be used as an alternative to GPS,
Really?
providing positioning, navigation, and timing services, or PNT, for both military and commercial applications.
Wow. So it's about much more than just streaming Netflix in the middle of the ocean. They're creating a robust infrastructure that can support critical functions across different sectors.
You got it. And this ties back to something we touched on earlier, how all of Amazon's seemingly separate businesses are actually interconnected, forming a powerful ecosystem.
It's like they're building a sprawling tech empire, with each piece reinforcing the others.
It is quite impressive, isn't it? For instance, the AI chips they're developing could be used to improve everything from product recommendations on their e-commerce platform to optimizing AWS data centers, even enhancing the performance of their Project Kuiper satellites. It's a beautiful web of innovation.
It's like a flywheel effect.
Mm.
Each business unit strengthens the others, driving innovation and growth across the board. It seems Andy Jassy is continuing that vision, but with a renewed focus on profitability.
Precisely. Now, while we're on the topic of Amazon's sprawling business, let's talk about their core e-commerce operations. There have been some interesting developments there as well.
Okay, I'm all ears. What's been happening on the e-commerce front? Anything spooky happening there?
Well, one thing that jumped out in the Q3 results was a slight decline in the percentage of units sold by third-party sellers.
Ooh.
This is a bit unusual, as Amazon has been increasingly relying on these sellers to expand their product selection and boost revenue.
Right, and the share of third-party units sold has been steadily increasing over the past few years. But in Q3, it dipped slightly to 60%, down from 61% in the previous quarter.
Interesting. Is this just a blip or a sign of something more significant? Are those third-party sellers getting spooked?
It's hard to say for sure, but they did mention a few potential factors that might have contributed to this dip.
Like what? Fill us in.
Well, for one, the strong growth in those everyday essentials categories we talked about earlier tends to skew more towards sales by Amazon directly rather than third-party sellers.
Okay, so it could be a temporary shift due to changes in consumer buying patterns. Makes sense. Anything else contributing to this shift?
Yes. Amazon is also facing increasing competition from Chinese shopping apps like Temu and Shine.
Ah, yes, those apps. I've been hearing a lot about them lately. They're known for offering some seriously low prices.
Exactly. And that's proving to be very attractive to many consumers, especially in a time of economic uncertainty.
People are looking for ways to save money. However, it does raise some important questions about fair trade practices, labor standards, and the environmental impact of shipping all those goods across the ocean.
Right. It's a complex issue with no easy answers. On the one hand, consumers love those low prices, but on the other hand, there are ethical and environmental concerns to consider.
Exactly. It'll be interesting to see how this all plays out. Will the U.S. government implement stricter regulations on imports from China?
Right.
And if so, how will that affect Amazon's business?
Especially considering they might consider utilizing that same rule for their own direct-to-consumer operations. It's a delicate balancing act for them.
For sure. They want to stay competitive on price, but they also need to be mindful of the broader implications of their sourcing practices.
Totally. It's clear that Amazon is facing a dynamic and evolving competitive landscape, both domestically and globally. But they're also clearly innovating and adapting to these challenges, which is part of what makes them such a fascinating company to watch.
Indeed. Now let's switch gears for a moment and talk about Alexa. You know, that friendly voice assistant that's seemingly everywhere these days?
Oh, Alexa. I feel like she's become a permanent resident in so many homes, offices, and even cars. She's practically ubiquitous.
She truly is. Amazon has over 500 million Alexa devices out there with 200 million active endpoints.
Uh-oh.
That's a massive reach.
Wow, that's a lot of Alexas out there. But with all the buzz around generative AI lately, I'm wondering how Amazon is positioning Alexa for the future. Will she be getting a generative AI makeover?
That's a great question. They actually addressed it directly on the earnings call. They believe that Alexa has the potential to become the world's best personal assistant, powered by the magic of generative AI.
That's a bold claim, especially with all the other players in the AI assistant space, like Google Assistant and Apple Siri, which are already incorporating generative AI into their systems. What makes Amazon think they can pull it off?
Well, for one thing, they have a huge head start with their existing Alexa ecosystem. They've already got Alexa integrated into millions of homes and devices around the world.
Right, so they've got the distribution and user base locked in. But what about the technology itself? Can Alexa really compete?
That's the key question. And to answer that, we have to look at what they shared about their plans for Alexa. They're focused on moving beyond those simple tasks we're all used to answering questions, setting reminders, and moving towards assistants that can take more complex actions on behalf of users.
So imagine an Alexa that can not only summarize your meeting notes, but also automatically schedule follow-up meetings and send thank you emails based on your preferences.
Exactly. They're talking about assistants that can anticipate your needs and take action to help you achieve your goals. It's like having a super efficient personal assistant at your beck and call.
That sounds amazing,
Mm.
but also a bit scary. Are we ready to hand over that level of control to our AI assistants?
That's a very valid concern, and it's something we as a society need to be thinking about as these technologies continue to evolve. But from a business perspective, it's clear that Amazon sees a huge opportunity in generative AI, and they're investing heavily in making Alexa a key part of that future.
It'll be fascinating to see how they actually implement these plans and, more importantly, whether users embrace this new generation of AI assistants.
Agreed. But before we get too carried away discussing the future of AI and Alexa, I think it's time to take a step back and consider the bigger picture of Amazon's Q3 performance.
Okay, sounds good. What's your overall assessment of their results? Did they manage to avoid any tricks and score a big treat this quarter?
Overall, I'd say it was a very strong quarter for Amazon. They exceeded expectations on both revenue and earnings, demonstrating continued growth across their diverse businesses. They showed us they're a company that can weather any storm.
And they did all that while also expanding their operating margins, which proves they can balance growth with profitability. It's a delicate dance, but they're managing it well.
Exactly. And don't forget their continued dedication to innovation. They're investing heavily in cutting-edge technologies like AI and robotics, and they're pushing the boundaries in areas like cloud computing and space exploration.
It's clear they're not content with simply maintaining their current market dominance. They're always looking for new ways to grow, evolve, and surprise us.
Precisely. However, they are facing challenges, particularly in their core e-commerce business. The rise of those low ASP items we discussed earlier is putting pressure on their margins, and they're facing intense competition from both domestic and international rivals.
Right, and we can't forget about the looming threat of U.S. regulations on imports from China, which could significantly disrupt their operations.
Very true. So, while there's a lot to be optimistic about with Amazon's performance, there are also some potential headwinds to keep an eye on.
Definitely a mixed bag of treats and tricks. So, what are the key takeaways from this earnings call? What should investors be paying attention to in the coming quarters?
Well, there are a few key things to watch. First, can they maintain this impressive operating margin performance? Or will it start to slip as they continue to invest heavily in growth initiatives?
Right, and what about their advertising revenue? Can they sustain that impressive growth rate? Or will competition start to erode their market share?
And of course, we have to keep an eye on AWS. Can they continue to dominate the cloud computing market? Or will Microsoft Azure and Google Cloud start to catch up?
And what about their newer ventures, like Project Kuiper and Amazon Pharmacy? Will they be able to execute those ambitious plans and turn those bets into profitable businesses?
These are all crucial questions that will shape Amazon's future.
Absolutely. I'm sure we'll be discussing them in more detail in future episodes of Talk Tickers, so stay tuned.
We will. But for now, I think we've covered a lot of ground.
We definitely have. But before we wrap up this episode, I want to leave our listeners with a final thought. One thing that really struck me about this earnings call was how Amazon isn't just building businesses, they're actively shaping the future.
I completely agree. They're at the forefront of so many transformative trends, from e-commerce and cloud computing to AI and space exploration. Their decisions and actions have far-reaching consequences, not just for their own business, but for the world as a whole.
Exactly. So as we continue to follow Amazon's journey, it's important to think not just about the numbers, but about the broader implications of their innovations and ambitions.
Well said. We need to be asking ourselves, what kind of future is Amazon building? And is it a future we want to live in?
Those are some big questions, but they're questions worth asking as technology continues to advance at such a rapid pace.
You're absolutely right. So, to all our listeners out there, keep exploring, keep learning, and keep asking those tough questions, because that's how we create a better future for everyone.
I couldn't have said it better myself. Thanks for joining us on Talk Tickers, everyone. We'll be back soon with another deep dive into the world of earnings calls.
You know, speaking of shaping the future, there's another interesting aspect of Amazon's business that we haven't touched on yet. Their foray into the world of prescription delivery with Amazon Pharmacy.
Oh, yeah. Amazon Pharmacy.
Mhm.
It's easy to forget about amidst all those giant numbers we were just talking about. I did see they mentioned it briefly in the earnings call, but they didn't dive into much detail. What's the latest with Amazon Pharmacy? Are they making any headway in that space?
They are indeed. They're actually making some pretty significant moves in the pharmacy world. They highlighted the fact that those traditional brick and mortar pharmacies still dominate the market,
Oh, yeah.
accounting for over 90% of prescriptions dispensed in the US.
Yeah, those old school pharmacies. You know, the ones where you have to make multiple trips, wait in long lines, and you don't even know the price until you get to the checkout. It's not exactly a convenient or transparent experience.
You're telling me. And while mail order pharmacies offer delivery, it can take 5 to 10 business days. Amazon sees an opportunity to disrupt this market by offering much faster delivery speeds.
Right, makes sense. They're all about speed and convenience, so it makes sense they'd want to shake things up in the pharmacy world.
Exactly.
Okay, so how fast are we talking? Will my prescriptions be arriving by drone?
Not quite by grown yet, but they did say that currently 95% of first-time Amazon pharmacy customers in the US receive their medications within 2 business days. That's already a significant improvement over traditional mail order pharmacies.
2 days. That's pretty impressive. But it gets even better, right? They didn't stop there.
Oh, they didn't stop there. For Prime members in certain areas, they're already offering delivery within 24 hours.
Whoa, that's a game changer. Getting your prescriptions delivered as quickly as you get a package from Amazon Prime, that's incredible.
It is. And they have even bigger plans for the future.
Oh,
They're planning to expand their pharmacy operations to 20 new cities next year. This means nearly half of the U.S. population will have access to same-day or next-day prescription delivery.
wow, they're moving fast. This is going to put a lot of pressure on those traditional pharmacies to step up their game.
Absolutely. But beyond just the convenience factor, Amazon believes that faster and easier access to medications will lead to improved medication adherence.
That's a really important point. So many people struggle to take their medications as prescribed, often due to inconvenience or forgetfulness.
Yeah.
If it's easier and faster to get their meds, they're more likely to take them as directed.
Precisely. And studies have shown that improved medication adherence leads to better health outcomes and lower healthcare costs overall.
So Amazon Pharmacy isn't just about disrupting the pharmacy market. It has the potential to make a real difference in public health.
Exactly. It positions Amazon as a company that's not just innovating for convenience, but also for the greater good.
That's a powerful message.
Mm.
I'm really curious to see how this all plays out. Will those traditional pharmacies adapt and offer more competitive delivery options? Or will Amazon Pharmacy become the dominant player in this space?
Only time will tell. But it'll definitely be interesting to watch this unfold. Now, let's shift gears a bit and go back to something we touched on earlier. The rise of low ASP items in Amazon's sales mix. Remember we talked about how that was a factor in the slight dip in third-party seller unit sales?
Yes, those low ASP items. Before we go any further, can you explain exactly what low ASP means for those who might not be familiar with the term?
Of course. ASP stands for average selling price. So low ASP items are simply products that have a relatively low price point.
Okay.
Think everyday essentials, those things you buy regularly without breaking the bank.
Got it. So basically, we're seeing a growing demand for those less expensive everyday items.
We are. Consumers are becoming increasingly price conscious, especially with the current economic uncertainty.
Yeah.
They're looking for ways to save money and stretch their budgets further.
Makes sense. And it sounds like Amazon is responding to this demand by expanding their selection of those low ASP items.
They are. They've been strategically investing in their logistics and fulfillment network to make it more efficient and cost-effective to handle these lower-priced products.
It's a numbers game, right? If they can lower their cost per unit, they can afford to sell items at lower prices and still maintain a healthy profit margin.
Exactly. And this is where their relentless pursuit of innovation comes into play,
Okay.
especially in robotics and automation. By automating more of their warehouse operations, they can reduce labor costs and improve efficiency.
Right. We talked earlier about how Amazon is constantly innovating in this area. Didn't they just launch a new fulfillment center in Louisiana that's packed with their latest robotics technology?
They did, and they're already seeing encouraging results.
Oh, wow.
This new facility is reportedly reducing fulfillment processing time by up to 25%, increasing the number of items they can offer for same-day or next-day delivery, and improving their cost to serve by 25% during those super busy peak periods.
Wow, that's impressive. So they're basically using technology to become more competitive on price, especially for those everyday low ASP items.
Precisely. And this allows them to appeal to a wider range of customers, including those who are more price sensitive.
But isn't this a bit of a risky strategy? Won't selling more low-priced items put pressure on their profit margins?
It could, but that's where their laser focus on cost control and operational efficiency becomes crucial.
Right. They need to offset those lower prices with lower costs across their operations.
Exactly. And this is where Amazon's massive scale and expertise in logistics give them a significant advantage over many of their competitors.
I see what you mean. They have this incredible infrastructure and global reach that few other companies can match.
You got it. They can leverage their immense buying power to negotiate lower prices from suppliers, and they can spread their fixed costs over a much larger volume of sales.
So even though they're selling some items at lower prices, they can still generate healthy profits thanks to their operational efficiencies. It's a pretty clever strategy when you think about it.
It is, and it's a key part of their long-term strategy for winning in the ever-evolving world of e-commerce.
It's fascinating to see how they're constantly adapting their business model to meet those changing consumer needs and preferences. It'll be interesting to see how this focus on low ASP items plays out in the coming quarters and years. Do you think this is a sustainable strategy for them?
That's the million-dollar question. Only time will tell, but it's definitely something to watch closely. Now, let's shift gears one last time
Okay.
and talk about something that might seem a bit out there. The potential for Amazon to enter the defense industry.
Hold on. Amazon and defense. Now that's an interesting twist. How do those two worlds even intersect?
Well, it all circles back to Project Kuiper and its potential use for national security. Remember we talked about how Project Kuiper could potentially be used as an alternative to GPS,
Yes.
providing positioning, navigation, and timing services
Sure.
for both military and commercial applications.
Yes, I remember. It sounds like something out of a Tom Clancy novel.
Right. Well, that capability has some pretty significant implications for the defense industry.
So how could Amazon potentially get involved in the world of defense? Would they be building tanks and fighter jets?
Probably not tanks and jets, but they could definitely leverage their strengths in other areas.
Okay.
One possibility is that they could partner with existing defense contractors to provide them with Project Kuiper's PNT services. They could also potentially develop their own defense-specific applications and technologies, leveraging their expertise in cloud computing, AI, and logistics.
So we could see Amazon supplying the U.S. military with everything from secure satellite communications to high-tech drone delivery systems.
It's not out of the realm of possibility. They're already working with the government on some cloud computing projects, so it's not a huge leap to imagine them expanding into other areas of defense technology.
That's pretty wild. It would be a major shift for Amazon to enter such a highly regulated and sensitive industry.
It would, indeed. But it's also a potentially lucrative market, and one that aligns with their existing strengths and ambitions. They're not afraid to push boundaries and disrupt traditional industries.
I'm sure this is something that investors and analysts will be watching very closely. If Amazon does decide to make a serious move into the defense sector, it could have a major impact on the industry and potentially even the geopolitical landscape.
Absolutely. Now, before we get too carried away with speculating about Amazon's future as a defense contractor, let's circle back to some of the key takeaways from this earnings call.
Okay, good point. We've covered a lot of ground. What are the biggest things we learned about Amazon's current state and future direction? Are they heading for a trick or a treat?
Well, I think one of the most important takeaways is that Amazon is successfully navigating a very challenging economic environment.
Yeah.
They're exceeding expectations on revenue and earnings, demonstrating the resilience and adaptability of their business model.
And they're doing it all while expanding their operating margins, which proves they can balance growth with profitability. That's no easy feat.
Exactly. Another key takeaway is their unwavering commitment to innovation. They're pouring resources into cutting-edge technologies like AI and robotics, and they're pushing the boundaries in areas like cloud computing and space exploration.
They're definitely not resting on their laurels. It's clear they're not content with simply maintaining their current market dominance. They're constantly looking for new ways to grow, evolve, and disrupt.
Precisely. But let's not forget about those challenges they're facing, particularly in their core e-commerce business. The rise of those low ASP items is putting pressure on their margins, and they're facing increasingly fierce competition from both domestic and international rivals.
Right. And the potential impact of U.S. regulations on imports from China is a big question mark hanging over their heads.
Very true. So while there's a lot to be optimistic about, there are also some potential headwinds to watch out for.
Definitely a mixed bag of treats and tricks. So what are the key questions investors and analysts will be focusing on in the coming quarters? What should we be paying attention to as we move forward?
Well, I think the biggest question on everyone's mind is whether they can sustain this incredible momentum. Can they continue to grow their revenue and earnings at such an impressive rate?
Right. And can they maintain those expanding operating margins while still investing heavily in those ambitious growth initiatives? That's a delicate balancing act.
It is. And then there's the question of how they'll navigate that increasingly competitive landscape, both in e-commerce and cloud computing.
Uh-huh.
Can they stay ahead of the curve and fend off those hungry rivals?
And what about those newer ventures like Project Kuiper and Amazon Pharmacy? Will they be able to execute those ambitious plans and turn those bets into profitable businesses?
Those are all billion-dollar questions that we'll be following closely.
Absolutely. And I'm sure we'll have plenty more to discuss in future episodes of Talk Tickers. Stay tuned, listeners.
We will. But for now, I think we've covered a lot of ground and given our listeners a pretty comprehensive deep dive into Amazon's Q3 earnings call.
I agree. We've explored the spooky and the spectacular, the treats and the tricks. But before we wrap up this episode, I want to leave our listeners with one final thought.
I'm intrigued. What's on your mind?
Well, one thing that really struck me about this earnings call was how Amazon isn't just a company, it's a force of nature.
I like that. A force of nature. What do you mean by that?
Well, think about it. They're constantly reshaping industries, disrupting markets, and pushing the boundaries of what's possible.
Right. And they're doing it at a scale and speed that's practically unprecedented. It's like watching a tech tornado.
Exactly. They're like a hurricane, constantly swirling and evolving, leaving a trail of disruption and innovation in their wake. You never know what they're going to do next.
And like a hurricane, they can be both destructive and creative. They can wipe out old ways of doing things, but they can also create new opportunities and possibilities.
You said it. So as we continue to follow Amazon's journey, it's important to remember that they're not just a business, they're a force to be reckoned with.
That's a great way to put it, a force to be reckoned with. I think that's a perfect note to end on for part 2. What do you think?
Great. Well, then let's take a quick break, and we'll be right back with the thrilling conclusion of our Amazon deep dive.
Welcome back to Talk Tickers, listeners. We've journeyed through a wild world of record profits, ambitious space ventures, and even delved into the fascinating future of pharmacy delivery. Amazon is a company that clearly never stands still.
It's been an incredible ride through Amazon's Q3 2024 earnings. We've seen the numbers, dissected the trends, and uncovered the strategies behind this ever-evolving tech giant.
And it's clear that Amazon is a company driven by a relentless pursuit of innovation. They're constantly pushing boundaries and adapting to stay ahead of the curve.
Before we officially wrap things up, there's one more thing that really struck me during the earnings call. It wasn't a specific metric or business segment, but more of an underlying theme that resonated throughout the entire presentation.
I'm curious. Tell me more. What caught your attention?
Well, I was really struck by the emphasis Amazon placed on their long-term vision and their willingness to invest heavily in areas that might not generate immediate returns. They're playing the long game, and they're not afraid to bet big on the future.
You're absolutely right. They talked extensively about their ongoing investments in AWS, Project Kuiper, robotics, and AI. All of these initiatives require massive upfront capital and might take years to fully pay off.
Exactly. And yet they're forging ahead at full speed, even in a time when many companies are tightening their belts and focusing on those short-term gains. It's refreshing to see a company that's not afraid to think big and invest in the future.
It's a testament to their unwavering belief in their vision and their confidence in their ability to shape the future. They're not simply reacting to current trends. They're actively creating the future they want to see.
I love that. It's almost like they're playing a different game than many of their competitors. They're not just trying to win the next quarter, they're playing to win the next decade, maybe even the next century.
Precisely. And that long-term perspective is what sets them apart. It allows them to make bold bets, take calculated risks, and invest in groundbreaking areas that other companies might shy away from.
And those bets often pay off big time. Just look at AWS. It was a huge gamble when they first launched it, but now it's their most profitable business, powering a huge chunk of the internet.
Such a great point. And who knows what kind of transformative businesses they'll create with their continued investments in AI, robotics, and space exploration. The possibilities are truly mind-boggling.
It's exciting to think about, isn't it? It reminds us that sometimes the biggest rewards come from taking the long view and being willing to invest in the future, even when the path ahead is uncertain.
So well said. So as we wrap up this deep dive into Amazon's Q3 earnings, I think the biggest takeaway for our listeners is this. Amazon is a company that thinks big, acts boldly, and plays for the long game.
And that's what makes them such a fascinating and influential force in the world today. They're constantly pushing the boundaries of what's possible, and it's a privilege to witness their incredible journey.
Absolutely. So to all our listeners out there, keep your eyes on Amazon because they're far from finished. In fact, they're just getting started.
And keep listening to Talk Tickers, because we'll be here to guide you through every twist and turn of their incredible story.
That's right. We'll be back soon with another deep dive into the world of earnings calls. Until then, keep those portfolios diversified and those minds curious.
Thanks for joining us, everyone. And remember, folks, the future is what we make it.